subscribe, and turn on the notification bell so you never miss a video. And hey, if you find this video helpful, drop a comment below. It really helps out the channel. Now, let's talk about something that could affect your wealth more than you realize: global debt. Right now, the world is drowning in it, and trust me, it's not just a financial problem for governments, it's a ticking time bomb for everyone. From skyrocketing inflation to potential economic collapse, the dangers are real, and they're heading our way faster than most people think. In today's video, we're going to explore how this hidden debt crisis could threaten your financial future and what you can do to protect yourself before it's too late. Let's dive in. What if I told you that the global economy is sitting on a ticking time bomb? A crisis that most people don't even see coming. And it's all because of one thing: debt. Right now, governments, corporations, and even individuals are drowning in debt, and this debt is growing faster than ever. But the truth is, debt isn't just a number on a balance sheet, it's a threat to your financial future. Today, we're diving deep into the hidden dangers of global debt and why it's one of the biggest risks you face. From inflation to financial collapse, we'll explore how this massive debt burden could lead to a crisis, and more importantly, what you can do to protect yourself. Let's start by understanding the scale of the problem. Right now, global debt is at an all-time high. According to the International Monetary Fund, global debt hit $300 trillion in 2023. That's more than 3 times the value of global GDP. Yes, you heard that right. Governments, businesses, and households have all been borrowing at record levels. The problem? Debt is out of control. In the last decade alone, the world has added $100 trillion to its debt pile, but it doesn't stop there, it's still climbing. Governments have been borrowing heavily to cover budget deficits, while businesses have taken on more debt to fund growth and keep operations running smoothly. And individuals? Well, the average person's debt, whether it's in the form of student loans, credit card debt, or mortgages, is rising faster than incomes. So, what happens when debt grows too large? Well, at some point it becomes unsustainable. When countries or businesses can no longer pay back their debts, they either default or have to rely on inflation to erode the value of that debt. But as you'll see in the next section, this creates a dangerous cycle. Imagine a world where debt is constantly increasing because governments and corporations keep borrowing more just to stay afloat. It's like a person using one credit card to pay off another. Eventually, something has to give. This is called the debt spiral, and it's a situation where borrowers are forced to borrow more to cover interest payments, leading to even more debt and higher risks of default. For countries, this often means turning to central banks to print more money to cover the debt. But this has dangerous consequences. Inflation starts to rise because there's more money in circulation, but the value of that money is decreasing. As inflation goes up, the value of your savings goes down. What used to cost $100 today might cost $150 or more in the future, leaving you with less purchasing power. This is happening right now in places like Argentina and Venezuela, where high levels of debt and inflation have created financial chaos for their citizens. You might be wondering, what does this have to do with me? The answer: everything. The global debt crisis isn't just a problem for governments or banks. It's a crisis that could affect your wealth, your job, and even your everyday life. When global debt becomes unmanageable, it can lead to economic instability, which means higher unemployment, lower wages, and a shrinking economy. You might see stock markets plummet, housing markets crash, and prices of everyday goods soar, all because of unsustainable debt. And if you think your savings are safe in the bank, think again. When inflation spirals out of control, your bank balance will buy less than it does today, even if you have a solid investment portfolio. Rising interest rates and economic turmoil could take a toll. Now that we understand the scale of the problem, let's break down how things get worse when debt spirals out of control. Imagine this. You borrow a little to cover a shortfall, but soon enough, you're borrowing more just to pay off the interest on the initial loan. Then you borrow even more to keep up with the growing payments, and the cycle repeats. It's like trying to fill a bathtub with the drain open. This is what's happening on a global scale. Countries are piling on debt to cover budget deficits, and instead of taking steps to reduce it, they're borrowing more to service the debt. The problem is that as debt grows, the cost of servicing it rises, and eventually, countries and corporations start running out of options. This leads to a debt spiral where borrowers are forced to take on more debt just to stay afloat. And once you're caught in this spiral, it's incredibly hard to break free. What happens next? Inflation. Inflation is one of the most dangerous consequences of excessive debt. Here's how it works. To deal with mounting debt, governments often turn to central banks to print more money. And when more money enters the economy without a corresponding increase in goods and services, prices start to rise. At first, you might not notice it, a few extra dollars here and there at the grocery store. But as inflation accelerates, the value of your money starts to shrink. What used to cost $100 today might cost $120 tomorrow. And your salary? Well, it's not going to keep pace with rising costs. This is what I call the silent killer of wealth. Inflation. It slowly eats away at your savings, investments, and purchasing power. Imagine putting away $10,000 today, only to find that in 5 years, it won't even be enough to buy a used car. And here's the kicker. Inflation disproportionately hurts the middle class and anyone who doesn't have access to inflation-protected assets like real estate or gold. The rich can hedge against inflation, but most of us are stuck watching our money lose value. So, what happens when inflation gets out of control? Hyperinflation. This is when inflation spirals completely out of hand, and the value of a country's currency drops so quickly that it becomes nearly worthless. We've seen it happen before, in countries like Venezuela and Zimbabwe, where hyperinflation turned everyday items into luxury goods. People were using wheelbarrows full of cash just to buy basic necessities like bread and eggs. But here's the scary part. If global debt continues to rise unchecked, we could see hyperinflation on a worldwide scale. And when the dollar loses value, it's not just the US that will suffer. The entire global financial system is built on the dollar, and a collapse in its value could send shockwaves through every economy. A global collapse isn't just a possibility anymore. It's becoming an inevitable outcome of unchecked debt. The question isn't if it'll happen, but when. Now, you might be thinking, this all sounds terrible, but it's a problem for governments and corporations, not me. But that's where you're wrong. The collapse of the dollar, rising inflation, and debt crises won't just hurt countries. It will hit you where it hurts the most, your savings. Let's talk about what will happen to your bank accounts, retirement savings, and investments if this crisis hits. The first thing you'll notice is that interest rates will rise, and not in a good way. The Federal Reserve and other central banks will likely hike interest rates to try and curb inflation. But this means higher borrowing costs for everything, from mortgages to credit cards. At the same time, your savings won't grow. Traditional savings accounts will yield almost nothing, and the value of the money sitting there will continue to erode due to inflation. For those with investments, stock market volatility will spike, and the value of your portfolio could take a serious hit. Worst of all, people will panic. Investors will flee to safer assets like gold or Bitcoin, leaving traditional investments to struggle. This financial panic will make everything worse, creating a vicious cycle of declining asset prices and growing uncertainty.